Okay, the recovery of China economics is a good sign for emerging market also. Is 2021 of the year of foreign investor to get aggressive for emerging market, especially Indonesia? What do you think about that, Thomas?
Yeah, I think for certain. I've been saying buy Indonesia since we were down very low. If you remember over the summer, I said buy it. And they said, are you sure? I said, buy it, buy Indonesia. So the JCI, as I said, is up 60%.
Is that still the same until now?
I think
buy Indonesia.
You buy Indonesia, buy emerging markets. And let me tell you why, Maria. There's a lot of different reasons. First and foremost, the emerging markets have recovered more quickly than the developed markets because they had it first and they're coming out first. So investors know this. They want to get exposure to Indonesia. Secondly, you're going to be getting more and more of the vaccine. You're probably going to get a lot of AstraZeneca vaccine. That will be very, very positive to get herd immunity. Third, you've got interest rates near all-term lows that favors investment flows into emerging markets. And then you've got a new administration in the United States with President Biden coming in a few weeks. That will be very good for easier trade policy, more predictable trade policy that favors emerging markets. The U.S. dollar will continue to stay subdued and will continue its longer intermediate-term downtrend. That's very positive for emerging markets moving forward. And then the valuations of emerging market stocks, they're 15% cheaper than their normal discount to developed market stocks. So this is a very good thing. And with some pockets of the market becoming frothy, investment managers like myself are looking for bargains. Emerging markets is where you can get it. And it's not just buying cheap stocks, it's buying cheap stocks that are growing. And that's exactly what's happening because emerging markets earnings growth for 2021 should be north of 25%. So you can buy faster earnings growth at a lower multiple in emerging markets. Managers are going to want to do that. If you look at the positioning, Maria, of investment managers around the world, we're below our normal historic weight to emerging markets. And just to get back to that historic allocation of, call it 9% on balance, there would have to be over $350 billion of inflows into emerging markets over the next year. And I think that's actually very conservative. We're going to see that. And a lot of money is going to go into emerging markets and a lot of money is going to go into Indonesia. It's a virtuous cycle. The fundamentals are going to start to improve. Then you're going to get multiple expansion on those earnings in the emerging markets, which is going to attract more flows. And the cost of capital is going to go down for the companies, which is going to enable them to grow even quicker. And then lastly, the reason we want exposure to emerging markets in Indonesia is demographics. You have a growing population, you have a younger population, and that's going to lead to more growth, and that's where you want to have money exposed.